So Ariana, you got a scenario where the client purchased a property in Victoria and she currently lives in Squamish, and she came to you to get refinancing because her current bank RBC told her that they can only refinance very little based on economic rent, correct?
Yes, correct.
Yeah. So because the property in Victoria is a residential property and she purchased on her personal name, right? And it shows on the T1 General. Now, she's using it for executive rental and long-term housing is different. Short-term rental versus long-term rental is totally completely different. On the residential side, they treat everything as a long-term rental, right?
Mm-hmm.
Whereas executive rental and Airbnb rental are deemed by lenders as not consistent, not reliable. So they would fall back down to which side? That side, right?
Mm-hmm.
Is what income can they get on the residential side versus commercial. Could be projected income, could be short-term income, doesn't matter as long as it has 12 months, 18 months of statistics they can go after, right? You can look at. And because she's struggling on the residential side and her employment income is already high, in the first scenario, if her income is already high, that additional rental income now bumps up her to now tax bracket level, right? So it's negatively affecting her two ways: financing it and taxation. I'm not a tax expert, I'm not an accountant, but I would strongly suggest her to talk to an accountant and get it originally from day one. If not, do it now because tax season's coming. She should have converted it to a holding company. So in a scenario where in this current scenario, she's on maternity leave, for example, okay? Her income drops down, and sure, her write-offs and everything else, her income tax doesn't really get affected.
But now she's going back to work, right?
Yeah, until she goes back to work. But say right now her income's down. It actually
no, she already went back to work.
So if she's income's down right now, yeah, her rental income is not going to be a big deal to not affect her, right? But it creates a double whammy negatively as well, because if she had it done on the commercial side, if she had that profit in her holding company names and her personal name, this is what it looks like. On a residential side, it's forget it, not even worth financing, right? On the commercial side, if it was in a holding company rate, things would be totally different. They would ignore her personal income. Like, who cares about what the personal income is on this side? We want to know what your income is on that side, your holding company income only. And holding companies' income is always consistent or growing, is it not? Right? Because it's Airbnb. So if that's the case, we have 12 months income already, plus now we're over 12 months, we also have bank statements showing the income is consistent. Then I can justify that short-term or executive rental income is going to maintain that consistently. And they will use that income minus expense to debt service, whatever the loan to refinance would be. How cool is that?
Super cool.
Way cooler, right? Because right now, it's like her income's like diddly squat. Like, this is residential property. I can't finance a commercial the way it's structured. And nobody's going to look at that heavy income that's generated from short-term rental. Because
and moving that's going to allow her to refinance her owner-occupied property to fulfill her goals.
Yes, because it's separating that personal liability now too. So it's double positive. It doesn't make any sense why she have it on her personal name if she's doing short-term rental. Liability-wise too. I mean, look at the legal aspect, right? I would not have short-term rental in my place. In and out, like I get, we got 30, 40, 50, 60 clients, guests coming in every year or every 6 months. I was like, yeah, that chance of liability is like exponentially higher. Is it not?
Yeah, totally.
Yeah, I mean, you heard horror stories. Some of the horror stories, people get killed in Airbnb places. Like not that it happened to me. It doesn't happen. Right? Geez, like, if it's a long-term rental, like chance of that happening is like really insignificant. Right? Statistically, very low. But the more people go through your home, statistics are against you. So yes, liability-wise, finance-wise, exactly, it's so much better. and totally debt servicing on your personal side will get shrunk.
Allowing her to do other stuff that she wants to do.
Yeah, allow her to refinance her own home and not even worry about that additional debt on the other home in Victoria anymore. You see? So people need to understand that it is not just about the profit. It is not just about income. It's sometimes you have to be strategic about it and structure it correctly, right? This is where the value comes in between a broker and a commercial financing broker.
I love it. That's what we do. Yeah.
Right. We look at it totally different, the aspect. Even if she makes no money from out of this, the idea of separating the liability between the personal house versus that short-term rental should be sufficiently good enough to make the expense worthwhile.
Yeah. Yeah.
All she needs is something to happen once and sue her ass off. I'm excuse my language. Sue her butt, right? And she won't have enough money to cover it. And now she's gonna affect her personal resident. Right? That sucks.
Yeah.
Right?
What's your language? I'm planning to share this video.
So this video, set it up live, between me and you, because this is about your client, right?
Yeah.
And I love it for the way that you brought this up to me, and you were heading in the right direction anyway, right? I just have to give you flush out more details about what other benefits there is.
Yeah. I'll share it with her. I think she's gonna love it.
So much more stuff you can do in commercial, even if the property is residential.
Yeah. Yeah. I love it.
And you said the bank came back and said we can only use realistic income, not what the real income is.
They don't want to look at the real income, but they have a history of 2 years.
Yeah, it's like, hey, we've been depositing this rental income money into your bank account. You're not using this money as real income? What?
Totally, I forgot that she's banking there, and
it's like smack in the face. Like, what? You see my deposits, but you don't believe me?
Yeah, sure. I love it. I think she's gonna love what we are checking for her.
This is business though, and treat like a business should be a business, not personal side. Okay.
Yeah,
so hopefully our viewers can get some value out of this as well, and they contact you, Ariana, or myself to help them, get them, structure them, set them up for success. Really, don't set yourself up for failure because you use nickel and diming and thinking about short term that you're gonna write off stuff and expense it down to zero. No, you want to grow your portfolio. You want to have passive income. You want to do more with your life. You need to think differently.
So, awesome. I think you're gonna love it.
Okay, Ariana, hope that helps.
Yeah, it does. I think she's gonna love this video.
Okay, I'm gonna end it like that. You can share it later.